Shae Russell from mining.com.au, and I'm here today with Mike Ward, the Strategy and Markets Advisor for ABC Refinery. Mike, long time no see.
Indeed.
How are you?
Very well, thank you. Very well.
I have the absolute privilege of going way back with Mike, and we normally get together at conferences these days. But Mike, I have managed to finally get you in front of the camera to talk about gold, my favorite metal of all time. Tell me, we've seen gold hit another new high this week. Was it its 19th or its 20th? I've lost track.
Yep.
Tell me, what kind of price movement are we seeing at the moment in the market?
So it's moving around quite a lot. It's moving $20, $30 at a time. So it's volatile, but the general trend is upwards and onwards.
It's just been up all year. It's been like there's a lot of momentum behind it, wouldn't you say?
It's been a good year for it if you look at from February onwards, and that's a little unusual for gold because it tends to take the stairway up and the lift well on the way back down. So it's nice that it's actually continuing in the upward vein.
Said by a battle-weary trader of how many years now? 40 odd
44 years, yes.
44 years. All right, what are the three key drivers of gold at the moment?
So in my view at the moment, obviously the big focus has been on the US dollar interest rates and US interest rates. So now they're calling for 2, probably 3 interest rate cuts by the end of the year.
Really?
So that is first one September, and then now they're talking about another 2. So that's a big shift away from where we were early in the year, and that's helping gold as gold doesn't return interest. It's always viewed to be bad in a high interest rate scenario and good in a low interest rate scenario. So that's working for it. It's definitely a tailwind. In my view, the other thing that's starting to happen now is I'm looking very closely at the US dollar.
Yep.
And for the last little while, the US dollar has been the cleanest shirt in the dirty laundry, if you like. It's been the best performing, but it's now starting to lose that I guess luster, and starting to look lower on a basket of currencies, and I think generally people are looking towards hard assets. I think there's a lot of US dollars out there, and they're finding a place to find home, and gold is ticking the boxes for that. It's hard assets generally, so hence the stock markets are doing well. Real estate market's still doing well, and gold and silver are doing well out of it as well.
This is all very positive for gold overall, isn't it?
Yeah, and I think it's the tip of the iceberg. I think we're just starting to see. I think we're just starting to see, particularly the US investors starting to focus more on gold. They've been the sellers. The hedge funds have been the guys who have been downplaying it, particularly because of the high interest rate scenarios. But I think it's just starting to roll over now and starting to become more of a focus as an investment product.
Final unfair question. In all of your 44 years of trading markets, tell me, have you seen gold behave like this in the past? Is there something you can tie it back to a previous economic event or a previous time in your life, or is this sort of like a new story building?
I started in 1980, and in 1980 you had hostages in Tehran, you had inflation running out of control, oil prices high, and gold was doing exactly this sort of thing. It was moving up very quickly, but as I say, it does have this ability to run into headwinds, fall back down again quickly, and investors say, I'm not touching it again, I'm leaving it alone. But the overall trend, I haven't seen an overall trend like this that has remained as strong as it has for so long.
Listen, Mike, it was an absolute pleasure to have you here. I'm so glad I finally got your face in front of the camera. And it was good to catch up, and I'll see you later in there for a drink.
Okay, thanks for having me.